Hooty hoo, all my stock market gamblers. Welcome today. I'm Tall Mike. I'm so glad you're here. What do we got going on with the stock market? They're still trying to push it up higher, right? The S&P record high, the Dow Jones record high, still trying to push it up. But here's the thing. NASDAQ not getting a new record high. The NASDAQ, I believe, has already started a bear market. It's going to be coming down. This is what happens at the top of markets. You get a divergence where the S&P is making a new record high, but the NASDAQ's not making a new record high. Look at the HYG. The HYG is junk bonds, right? Junk bonds are coming down, and junk bonds lead the market. When they start to come down, there's a delay, but the S&P will follow the junk bonds. So junk bonds starting to come down while the S&P is still making record highs. There's a divergence there, and the divergence going to change. It's going to be the S&P starting to follow the junk bonds lower. Once again, just my take. Moon boys, I know you think it's going to double from here. We'll see if you're right. All right, so I was reading, well, actually, this was a YouTube video. In my YouTube stream, there was an old Dave Ramsey video about gold. I got to click this. It was from a year ago, and it was a caller called into the Dave Ramsey show and told him he was going to buy $60,000 worth of gold. And Dave Ramsey, of course, told him he's going to lose his butt not to do it. Now, hopefully he didn't take Dave Ramsey's advice, because he would have lost about $30,000, because gold's up about 40% in the last year, right? But Dave Ramsey, he told him gold's just a worthless relic. It's a pet rock. You're going to lose your butt. Well, what's Dave Ramsey telling the people right now? Telling the people right now that it's a great time to buy a house. Really? I'm telling you, you buy a house right now, you're very likely to lose your butt. You don't want to lose your butt is all I'm saying. But Dave Ramsey's telling you to go out there and buy a house. You see, now the Federal Reserve, they want to help the housing market. They know the housing market's frozen up, right? Housing market's locked up. Things aren't moving, right? Things aren't moving. They're just kind of stagnant, just kind of sitting there. So what's Federal Reserve do? Well, they come and they cut the rate by 50 basis points. But here's the thing. Mortgages went up. Has the Federal Reserve lost complete control? If they haven't lost it yet, they will lose it if they continue to cut rates, because the low end of the bond market, the short end, is starting, that's where they cut the rates. That's where they have control over. But they don't have control over the long end of the bond market, and that's where the mortgage rates lie, and that's starting to go up. You can look at the TLT. When they cut the rates, everybody was expecting the TLT to go up. Well, it went down. Very shocking, right? Because that's the long end of the bond market. So the Federal Reserve, they've lost control. They want to help the housing market. They want to keep house prices up here. Now, the only thing they can do is to print more money. It's called quantitative easing, QE, if you will. So they're going to print more money, right? What are they going to do with the money? Well, they're going to buy the long end of the bond market because they're losing control of that. So they'll be the only buyer for the long end of the bonds. The 20-year bond, the 30-year bond will be bought by the Federal Reserve, and you'll start to see their balance sheet starting to creep up. Now, it did reach $9 trillion. I think it's back down to $8 trillion now, but it's going to pass $9 trillion. Why is it going to pass $9 trillion, Tall Mike? Well, it's going to pass $9 trillion because the Fed's going to have to buy everything, right? Okay, so if they don't want to see mortgage rates going up to 10%, they're going to have to be the buyer of these mortgage rates. Now, the Federal Reserve already has $3 trillion of mortgages on their balance sheet. See, they're the only buyer of mortgages at these low rates of 6%, right? 6% is still a low rate. Now, it's going to be going higher. I say we're going to reach 10%. A lot of people disagree with me. A lot of people laugh at me for saying that. But I think it can go a lot higher than 10%, especially when you see inflation start to take off again. Why is inflation going to take off, Tall Mike? Well, inflation is going to take off because they're going to have to print money to do the QE, to buy the bond market, to do the QE, to buy the mortgage market. Now, they already own $3 trillion. What if they didn't buy those $3 trillion? What would mortgage rates be? They'd already be above 10%, but the Fed has bought $3 trillion with the T dollars of mortgages, right? And they're going to buy $3 trillion more now. Here's how they're going to do it. They're going to be sneaky about it, right? They're They're going to give the money to Fannie Mae, Freddie Mac, and they're going to have them, give you a HELOC loan, tell you that you can tap your equity. They want you to tap your equity because they want you to get out and spend, right, to help the economy. So they're going to do $3 trillion in HELOC loans. That's the Federal Reserve's plan, right? It's through Freddie Mac and Fannie Mae. It's going to go through them, but it's really the Fed printing money and getting more involved in the mortgage business this time with HELOC loans. But they're also going to do it with regular mortgages. They're going to buy the mortgage-backed securities, and they're going to have to buy the commercial mortgage-backed securities, right? The commercial-backed securities, about 4 trillion of those come and due. So we're looking at the federal balance sheet going from about 8 trillion, I think it'll double, 16 trillion. And they'll say, well, that's not, monetizing the debt or anything. That doesn't really count. That's just the Fed balance sheet. And you go back, not that long ago, Fed balance sheet was under 1 trillion, shot up to $9 trillion. They just print the money like it's nothing, right? They've lost control of the market. They cut the rates. Long-term rates went up when they cut the rates, have lost control. That's not working for them. They're going to have to go back and start printing money, and they're going to have to start printing money at a faster pace. Now, it's my opinion. This is just my opinion. At some point, the United States must become financially responsible. Financially responsible, they must become if they want to save our country. Now, look at I don't know why we let these people stay in power, right? They can't balance a budget. I mean, right now, there's an election coming up, and what you're voting for is debasement of the currency. Do you want to debase the currency a whole lot? You vote for this person. You want to debase it a whole lot, but a little bit less, you vote for this person. But either one, you're voting to debase the currency. Would you like to have your money stolen from you? Would you just like someone to come in your house and steal your money? I don't think you would. So why are we putting up with these candidates that are just going to debase the currency? That's their whole campaign, is telling you how they're going to do it. They're going to do it by the printing of money we don't have, right? They're going to continue to print into oblivion. You're going to see hyperinflation in this country if the United States does not become fiscally responsible. Now, I think they got to become fiscally responsible at some point. You see, they're cheating us out of our money. Now, they're saying, hey, we're not raising taxes, right? We're not, well, one of them says they're going to raise taxes, going to raise it by a lot, right? The other one wants to lower taxes. But they're going to do it in many ways, right? They're going to do it with inflation. Inflation's a tax. It's the everything tax, right? It's how they cheat you. It's how they steal the money from you. And that's why we got to get back to sound money. We got to get a sound money system back in the government so they can stop ripping us off, so we can get back to real, basics of economics, right? Right now, we got the Keynesian economists in there, right? And what are Keynesian economists? Well, they tinker with it, right? They think they can help the economy by lowering or raising rates. They think they can help the economy by printing money or taking money out of the system. See, they're tinkering with it. We got to get rid of that. That's a failed experiment. We're now $35 trillion, almost $36 trillion. And that's a small number, really, because the real number is closer to $200 trillion when you take into Medicare and Social Security is another $100 trillion. It's unfunded, right? So, I mean, the number is getting huge, getting astronomical, but you got to get away from this failed Keynesian economics experiment, right? And we got to get to Austrian economy where it's free markets, right? You have free markets. You have the market decide what a house should sell for. A house in my area should not sell for $3 million. No way it should. It's just not right. It should be about half that at best. And I believe they will come down to that when we get to a free market economy again. When the Fed stops buying every mortgage that's out there. When they stop printing money and we're paying for that money. Don't think that it's free. There's no such thing as a free lunch. They'll tell you there is. And look at all the candidates. They're going to give you stuff for free. Stuff for free, right? Okay, they'll tell you it's a free lunch. No, it's not a free lunch, meaning you pay for that lunch, and it's getting really expensive. We lost 30% of our purchasing power in the last 4 years. Last 10 years, we got our money cut in half, chopped in half, right? And in the next 4 years, I think we're going to get it chopped in half again. That's my opinion. That's what I see is happening. I see inflation's going to come roaring back. We got the inflation numbers out the other day, and they were starting to creep up again. again, right? Already starting to notice it. Maybe Jerome's starting to think, hey, maybe I made a mistake cutting rates. And maybe he did. And maybe he'll have to do an about face and start to raise them up as that inflation number starts to come back. You see, what's happening right now is we're getting a lot of defaults on loans. The U.S. banks report over $18 billion in newly defaulted loans just in the third quarter, So you multiply that by 4, right? 18, 36, $72 billion in newly defaulted loans for the year. That's what pace we're on. But that's a slow pace because it's going to become much faster. It's going to kind of snowball. And we're going to have all these people that, well, they're not going to be able to make their mortgage payment, not going to be able to make their car payment, not going to be able to pay back their student loans, and their credit cards are already maxed out, so they can't get more money to pay everything back. But that's just my take. A lot of people think that this is the best economy, right? But we have to take back control. We have to take it back. Look at you can go vote for either candidate. It really doesn't matter. I say you put a donkey in the office and it's probably going to run the country about the same as either candidate's going to run it. That's too late, right? It's too late. We have to get back to take the power away from these egomaniacs in Washington, and all they do is spend, because that's where the power comes from. What if they couldn't spend money? They wouldn't have any power, right? They wouldn't have any power to give to other countries, to give to certain corporations so they can go trade the stock market on the insider trading, because they know which corporations they're going to give the contracts to, so they go gamble on. It's not really gambling when you know who's going to win, right, Nancy? Yeah, Nancy gets it. She gets it. Okay, you work for the government, you're worth $200 million. Isn't that amazing? No wonder everybody wants to be a congressman. No wonder everybody wants to be a senator, right? Because when you leave, you're worth $100 million because you get the inside track on the stock market and you get to do the inside trading. Just look at the Federal Reserve. They got caught insider trading red-handed. Nothing happens, right? They say it was unfortunate. They say we're going to monitor ourselves better. Well, that's great, Jerome. You're worth over $100 million and you do it by insider trading. Really, you should be embarrassed. I think a lot of them should be embarrassed. Most politicians out there should be embarrassed. I think we got to get rid of them. I really do. They can't balance the budget. They keep spending my money, your money, on stuff that we don't vote for them to spend. Did you vote for us to go build these bombs and send them over to other countries so they can blow up other parts of the world? Did you vote for that? Is that where you want your money to go? That's not where I want my money to go. But here's the people running the country. That's where they're sending the money to. We got to get rid of them. How do we do that? We take our power back. That's how we do it. We take our power back. We have a quiet revolt, right? Take some money out of the bank, go buy physical gold, go buy physical silver. They put the money back into people. You see, that's storing your purchasing power. Why would you let someone else hold on to your purchasing power when they're robbing you? Why? Take your power back, right? Now, if just one person does it, I'm doing that. I'm just one person, but that doesn't mean anything to them. But if everybody starts to do this, they start to lose more and more power. They start to panic, right? And because we take the power away. The people have got to get the power back. We got to get rid of these evil people out there that are trying to run our country, and they're doing a horrendous job of it, in my opinion. I don't like the direction our country's going. I barely recognize it anymore. A lot of people have left the country, moved out of the country. I'm not going anywhere. I love my country. Don't like my government very much right now. Why? Because they're incompetent. They're incompetent. They can't do their job. We put them in there to do a job, and they're not getting it done, right? But I still love my country. I'll stay here and fight till the end, right? And the end may be here sooner than we think. We're going to get a financial end coming because the dollar is going to go to zero, right? It's going to go to zero. Your purchasing power, they're going to take every bit of it. So probably already mostly gone. There's a little bit of confidence in it because we have the biggest guns in the world, the biggest weapons in the world. We say if you don't use our dollar, we'll come and blow you up, right? I mean, that's what we do. We already weaponize the dollar. Hey, you don't like us, we'll just steal your stuff. We'll steal all your dollars. Just ask Russia. We stole them from them, right? Oh, that's just war, Mike. That's just normal stuff, right? You had the reserve currency, and you're not going to have it very long because you don't respect it. You make stupid decisions. In my opinion, this is just my take. Anyways, if you like this stuff, give me the thumbs up right now. Punch that subscribe button. Everybody, we've reached the weekend. Get out there. Have a great weekend. I'll talk to you again next week. Bye-bye now.